Hello guys. Today price action wise it was really good. Started trading today with one of my funded accounts and two eval accounts. I lost all three of them. For the past 1 week I've been trading on my paper account and I've been doing very good. But today when it came to real money, I just couldn't control my emotions and I did revenge trading and over trading and lost all three of them. So this will set me back for another 6 months. So another 6 months of grind. So I just want to review today's market. So before 9:30, we can see from 7 o'clock to 9:30, this entire liquidity was left open. It was never taken out from 7 a.m. till 9:30. This entire swing range high was never taken out. So this liquidity is still intact. And once price took the previous swing low on a daily chart and weekly low, we are expecting for a shift in market structure. And once price closes above this candle, we have a shift in market structure and this is our breaker. This is our breaker. We could have gone long here. So we could have gone on long here. And we could have put our stop loss. Targeted this liquidity about 7 a.m. So this could have been one trade. And here, once price closes above this down close candle, we have a bullish order block. This series of down close candles and this strong closure here. This is a bullish order block. So we could have gone long again once price came back and touched this bullish order block. We could have taken one more entry here and we could have exited above this 7 a.m. highs. Now we have 15-minute fair value gap here, bearish fair value gap. So once price into this zone, we can see on a 15-minute chart and a 5-minute chart and even 1-minute chart. And even 1-minute chart. Price never closed above the 50% of the bearish fair value gap. It always stayed below this. So this is a very good signature. But after closing below this, but price never gave us any bearish fair value gap or shift in market structure. Price was just consolidating. So we wait for our next window, that is 10:30 a.m. to 11 a.m. We had a divergence here with ES. NASDAQ made a lower high, whereas ES made a higher high. So this is what we can see. ES made a higher high, whereas NASDAQ made a lower high. And price was just touching this 15-minute bearish fair value gap. Actually, this is 1 hour bearish fair value gap. Sorry guys, this is 1 hour bearish fair value gap. On a 1 hour chart, this is the bearish fair value gap. And you can see price never closed or went even, price rejected from the lower half of the bearish fair value gap. So now we are waiting for our shift in market structure after divergence. So when price closes below this swing low with energy after divergence, this could have been our entry. So this could have been our short position, and our stop loss would have been 50% of the bearish order block. And our exit would have been, this is the first presentation, 1 minute first presentation fair value gap. So we could have exited here. So first trade was here, second trade was here, and this could have been our third trade. Moving on. Once price closed on a 5-minute chart, once price closed below this bullish fair value gap, this is the first presentation, 5-minute fair value gap. Once price closed below this, and you have this wick to wick, this is a balanced price range. Price here has been delivered both buy side and sell side, which is inside this 5-minute bearish 5-minute bullish fair value gap, which is now should act as inversion since we closed a body below this. So when price again went back up, you can see the clear rejection here and a very good signature. Price rejected the wick with huge wick, and price never even went to the cross the 50% of this balanced price range. So again, we wait for the rejection, we wait for any breaker or bearish fair value gap to form. So now we have a breaker here. This is the down close candle, series of up close candles, manipulation, and then expansion. So we have a breaker, this down close candles followed by this down close candle followed, where we have a bearish fair value gap. So we could have entered here. This could have been our one more trade. We could have entered here. And we could have exited below the body of this candle. So 50% of this wick, I want to close below 50% of this wick. So this could have been one more trade. At the same time, we have a first presentation here. Price is just consolidating here. No clear rejection either to the expansion, to the upside, or but in the next window, next 30-minute window at 11:30, we can see price went up and rejected and closed below this first presentation fair value gap. And these are Mohawks, guys. Just body closed above this 1 minute. It's acceptable. So once price closes below this first presentation fair value gap, now we have this down close candle, series of up close candles, and then closure below this first presentation. We have a breaker. So this could have been our one more entry. We could have gone one more short here on the next candle, and our stop loss would have been on the top of this first presentation, and our exit would have been 50%. This would have been one more trade, 50% of the wick. This would have been one more trade. Again, at 12 p.m., we have a divergence with ES. NASDAQ made a higher low. This low never breached this low on NASDAQ, whereas on ES, we had a lower low. So once we had divergence, again we wait for the confirmation. So for the confirmation, we have this bearish fair value gap, which was pierced here. And again, this swing high has been price closed above this swing high. So now again at the top of our, we have 12 p.m. macro, that is 11:50 to 12:10. So we wait for the manipulation to happen. So in this 12 to 12:30, we see this manipulation here, and we see this expansion. So this series of down close candles, once price closes above this series of down close candles, we could have gone long here. We could have gone long here, and we could have exited on this time range 11:30 to 12 p.m. High was never taken out, so this could have been our first partial. Again, we have series of swing highs here, 1, 2, 3, and we have this bearish fair value gap. So we could have entered long here, and we could have taken partials while price was going up. And once we close above this first presentation fair value gap. We wait for the manipulation to happen in the macro window, that is 1 p.m. 12:50 to 1:10. So once price closed above this, you can see this 1 o'clock has started. So price again did this manipulation and we have this expansion. So we wait for the shift in market structure. So this down close candle, so this bearish fair value gap and this swing high, price closes above this. So once price closes above this bearish fair value gap, we have balanced price range and price has crossed above this swing high. So we have our confirmation. At the same time, price never went below 50% of this first presentation fair value gap. Only wick went below it. So 50% was never breached, which is a good signature. At the same time, we have our shift in market structure. So we have our balanced price range inversion. So again, we could have gone long on this candle. So we could have gone long on this candle. And our stop loss would have been below this candle. And our take profits would be partial, and this bearish fair value. This bearish fair value. So this could have been one more trade. There were so many opportunities today, but still I lost 3 of my accounts. So this means I need to work hard on my psychology and emotions. I need to still be in demo. So still struggling, guys. Still struggling. Just when real money is not involved, it is so clear, like price action looks so clear, but when money is involved, I just don't know. It's like what do you say? Just somebody has erased my memory. Somebody has erased all my logic. Everything I've learned, I don't know. It just doesn't work when real money is involved. Just I don't know what to do. So I'm still struggling with it. So try to be. This whole thing is going to set me back for 6 months financially. So I'll still try to be in demo and I'll try to practice more. That's it, guys. Thank you.